So I've just come back from Goodwood, one of the biggest car events in the UK, and I don't think it's controversial to say that the Chinese have taken over. This is the Yangwang U9, China's EV supercar, which they're hoping to use to compete against Ferrari and Lamborghini. This is the Honky, basically their presidential car brand. The main sponsor of the event is MG, which is Chinese owned and made. And this is the new Mini Aceman. It's not British and it's not even German. It's basically entirely Chinese, and I didn't get any vision of it because I didn't expect to make a video about this, but the central quad area was completely surrounded by Chinese car brands like Build Your Dreams, Chery and NIO. So what is happening here? Well, basically Chinese car firms are in a crisis. What they wanted to do was run their EV industry at loss and flood Western markets with cheap Chinese cars, driving Western and Japanese manufacturers into the ground, replace petrol and diesel powered cars to make the world reliant on Chinese owned battery supply chains and secure China's future as the world's car factory. However, nothing has gone to plan. Firstly, likely due to their weak economy and the shuttering of some subsidies, China's domestic car sales fell for the third month running in June, falling 6.9% year on year. Furthermore, it's been widely reported that hundreds of thousands of Chinese EVs are clogging up European ports, and that was before the new EV tariffs were implemented in July. These tariffs are also no joke. SAIC, the owner of the former British mark MG, now pays almost 50% in tariffs in total, and to make it worse, it was recently announced that the tariffs can be applied retroactively. Furthermore, the mere prospects of tariffs cut 20 to 30 percentage points off China's EV export growth in recent months, according to a leading Chinese auto industry body. And I haven't even yet spoken about America's 100% tariffs. This will shut out Chinese EVs from the most profitable car market in the world for good. Although it's too soon to say what this will lead to, the early signs heading into 2024 were already looking quite grim. The National Bureau of Statistics in China revealed that less than half the car production capacity was used in 2023. Also, currently BYD is the only consistently profitable Chinese car maker around, and the situation is unlikely to improve, with the consultancy Alex Partners predicting only 19 of China's 137 EV brands will be profitable by decade's end. And now let's circle back to the UK, which is currently also in its own car manufacturing crisis. In 2020, Ford's Bridgend engine plant closed down. In 2022, Honda's Swindon plant shuttered after 36 years, and Jaguar has this year ceased manufacture in all their dedicated plants. Only Nissan in Sunderland is really producing any mainstream cars. The result is a £25 billion trade deficit in cars with the EU. And here's the opportunity. The UK could choose to position itself differently from that of Europe and embrace Chinese investment, says Jonathan Davenport from Gartner UK, speaking to Autocar. He suggests that Europe squeezing out Chinese autocar makers could lead to the targeting of the UK instead. An MG spokesperson told Autocar there has been no indication to date that the UK will follow Europe. But how will this look like? BYD is currently building a $1 billion manufacturing plant in Turkey to avoid EU tariffs. The UK, with its existing infrastructure, could also be an enticing prospect, and with time it could be a strong market and manufacturing base for Chinese cars, which would then be sold domestically and then into the EU. This should help offset some of the trade imbalance. And the UK government's hands might also be tied, for Chinese car makers already so heavily invest into UK car brands, including Lotus and Jaguar. This also isn't very dissimilar to what happened with Chinese car manufacturers in the UK in the 1970s and 80s, except this time there are no domestically owned UK brands brands to protect. And thus, with the closing of the EU and US markets for Chinese cars in recent months, the UK is now the target for all the Chinese car brands. Last year, only NIO attended Goodwood, but this year, pretty much all of them are here, desperate to capture the attention of the English public. But is this a good bet for the Chinese? Well, the UK market is quite small, but it's probably the best they're going to get. And as for the UK, well, it could look attractive initially. It could revive auto manufacturing in the country. It could help the UK economy. It could also result in cheaper cars for the consumer, important in a cost of living crisis. But does the UK want to align itself with China? Does the UK want to exist in a world dominated by Chinese money? It could be a very dangerous game to play for short-term goals. But what are your thoughts? Let me know in the comments below, and thanks for watching.